Okay, and welcome to another edition of Market Marauders. Today we're going to go over FuelCell Energy Incorporated. Their ticker is FCEL. Currently, this is what they're trading at, 37 cents. So another penny stock. Over the few weeks they've gone down, but they're going up just a little bit more. So what is FuelCell? We'll see. Play a little video explaining what they do. Okay, so basically, fuel cells that they make supply electricity, cooling, and heating. Um, this is from their website, Fuel Cell Energy. Um, just the links on the bottom where the video is. So, you know, pretty green technology, something to look forward to in the future. Um, but going into their financial reports, this is the fuel cell energy reports for first quarter fiscal 2019. Uh, Going into that, some points to look at here. So they have a service license. Uh, Revenues totaled of 11.8 million for the first quarter of 2019, which is more than what they had in 2018. So from 11.8 to 4.1, which is pretty good. And they have a long-term service contract with Korea Southern Power Company, so KOSPO. So, contracts are always a great thing to have, bring more revenue into the company. But one thing that I want to look at that stood out to me when I read this was it says operating expenses for the first quarter of fiscal 2019 totaled in 13 million compared to 10.2 million for the first quarter of fiscal 2018. The increase is related to spending to complete the development and construction of SureSource 4000 plant located in Danbury, Connecticut, as well as higher professional related and sales marketing expenditures due to business activities in the first quarter fiscal 2019. So this one statement kind of concerns me because we're talking $2.8 million that were spent in a year's time for one of these plants, which is supposed to be one of their main plants that they create. So it's kind of iffy to me. If you want to see what it is, these are the products that they serve. So this is the smallest plant that they make, and it produces 1.4 megawatts, uh, 60 hertz or 50 hertz. It can be shipped overseas or it can be in the U.S. It's 480 volts AC. Produces about 1500 kilovolts, and then this is their Sure Source 3000. Produces 2.8 megawatts, which is a step up from the other one. Uh, and it also is in 60 or 50 hertz. It's 13.8 kilovolts AC. Uh, these were pulled directly from their website as well. And this is their biggest facility, the Sure Source 4000, 3.7 megawatts of power, and it has 13.8 volts AC and 50 or 60 hertz, so it can be shipped overseas or in the US as well. This is the one that they built in Connecticut, their biggest one. The thing that concerns me is that when they built it, they went 3 million extra dollars over in 1 year to build this one facility. Now, granted, it's not just for building the facility. It's stated that it went to as well as higher professional related and sales and marketing expenditures due to business activities. But I mean, $3 million extra. I mean, $2.8 million extra. It's quite a bit to build one facility. So it's just something to keep your eye out for. Um, but on the positive side of that, well, another part that stood out to me is their backlog and project awards. So they're granted quite a few projects, but they have quite a few backlogs as well. So, I mean, it says the company had a contract backlog totaling of 1.3 billion as of January 31st, 2019. And it's July. So, I mean, they're getting more and more orders than they can actually fulfill. And it seems like they're putting themselves into debt trying to fulfill these orders. So I think the technology is there, but overall, the I don't think the financial part is there. And I feel like once they get their finances together, it'll be a pretty good company. But until then, it's they're going to be struggling to demand all these orders. I feel like they're taking more contracts than they really can handle at this point in time. So I feel like they should back off from taking more orders and fulfilling the orders that they have, and then increasing their track record of reliability and service for that. And then once that's done, they should take more orders. So then they have more of a catalog of things other than just, this is some mock up of what it's supposed to be, or this is some mock up of what that's supposed to be. And, you know, more of a track record of service over, we have all these orders that we got and all these contracts and all this money that we're supposed to be getting, but no deliverables. So overall, I would say for the company as a whole, I would probably, you know, buy and hold, knowing that, in the future, once all these orders have been produced, then it could be a pretty profitable company. The technology is renewable energy. I know other countries, other than the U.S., are really big in renewable resources. The U.S. is catching on, but you know, there's a big market overseas for facilities like these or facilities like these as well, and making energy more efficient and saving money overall would probably be a good marketing ploy for this company. But I would say if you were thinking about investing in it, I would buy and hold, but only knowing that they have all of these backlog orders. So I'm kind of on the fence about this one. Kind of like if they kind of have a little bit more to prove here to me before I would like dive full feet in. I would like to see some of their orders be fulfilled more, as well as you know other contracts, the bigger contracts being fulfilled. All right, thanks guys for watching. Make sure you like and subscribe, and good luck trading out there.